finance. Now it's new and improved. Fortified with the ingredients that investors love. On this week's episode, In Crypto We Trust.
We've seen over 50 hacks and more than $1.5 billion worth of crypto has been stolen. Redeemability. Are you going to be able to get the crypto that you are owed back?
The biggest obstacle for cryptocurrency investors is trust. There's a huge gap in knowledge between a basic understanding of the internet and cryptography. Cryptocurrency is like the Wild West of investment, and that poses huge obstacles for larger institutions trying to get into the space.
So the biggest risk in the industry, I would say, is actually when new users join the space, it's actually obtaining and holding the crypto assets themselves. And actually, most of the time, people don't hold the asset themselves, but they might think they do. Whether new users know it or not, many times they're actually relying on third parties to hold their crypto for them. In the traditional financial system, we're used to relying on third parties because we trust them. You trust your bank. They get audit reports. They're heavily regulated. But in crypto, the relationship with the custodian looks a whole lot different. Because once your asset is gone, it's really gone and there's no recourse.
The legacy financial system is regulated to provide assurance that your assets are safe and secure. Armanino is solving these problems for cryptocurrency and perhaps creating a better system altogether.
The way we think about this is that money requires trust. So the US dollar, other fiat currencies, they're really nothing but trust. Digital assets offer a new paradigm where trust can be enabled with the certainty of code and cryptography. Now, the trust and transparency mechanisms available to users of traditional financial instruments, they're just largely unavailable to users of digital assets. In a nutshell, the problem for users of these centralized digital asset exchanges, as well as customers of custodians, loan platforms, and other emerging service providers that custody these assets, is that these investors are required to place great trust in the service provider, but they don't have the formalized and available mechanisms of trust and transparency. So risk is high. Now, the word custody is key here. So what we've seen over the last 10 plus years of history of Bitcoin and digital assets has really been a checkered past when it comes to the safekeeping of user funds.
A checkered past is a nice way of saying online theft and hacking. I talked with the team at Armanino to see how big a problem this is relative to traditional finance.
There's been at least 45 hacks of crypto centralized exchanges since the very beginning. And the total dollar amount at the time of each hack is just under $2 billion. The Mt. Gox hack was so massive. It was about 850,000 Bitcoin stolen from the exchange, which is a little less than 5% of supply. Satoshi has about 1 million Bitcoins. So, and at the time of the hack, Mt. Gox was doing about 70% of the transactions across the network. And before that happened, everyone was all in on the decentralization and what gave Bitcoin kind of its magic. And that was a huge wake-up call to everybody that when you can have a decentralized ledger, but if you introduce centralized choke points, there are risks to the whole network. Bitfinex has had a couple hacks. Binance has been hacked. Bitstamp has been hacked, I believe, and BitHum. A big phrase in our industry is not your keys, not your coins. And I like that for certain people, but it's not realistic longer term. Some people will never want to custody their own crypto. It's similar to bank runs. If a centralized exchange isn't fully reserved, and there's a hack or one of these things that we talked about, and everyone decided to start withdrawing at the same time, it would break the exchange. Very similar to like a bank run. The concept of proof of reserves really grew out of that. Like some exchanges like Kraken and a couple other ones took it on themselves to really try to build the industry back up and provide transparency. The hack unfolded over a very long time. I think it was almost 3 years. So if there had been a proof of reserve solution on Mt. Gox, people would have caught that way earlier.
If you take a recent analysis, counts about 11 billion in losses since 2011. So that means that the total value of crypto in custody today, conservatively, half of that has been lost, stolen, or hacked since 2011. Now, That's a staggering statistic, a staggering number. But let's also consider there are some misconceptions about the security of digital assets versus traditional financial markets. The truth is that bank robberies are not uncommon today. In 2017, there were 4,000 reported by the FBI. It's 11 a day. And Bernie Madoff alone, one man, stole 20 billion in investor assets. So I think the conclusion is, that while risks are prevalent, it's not that crypto or digital assets are inherently less secure or that preventing fraud is less possible. In fact, we believe the opportunity is bigger, that blockchain technology offers more potential to protect consumers and investors than the current opaque financial system, which really is reliant on multiple counterparties, multiple intermediaries. And while the whole idea is that you trust in the code, it's fully decentralized, and we don't need a centralized player, the truth is that there are many pinch points in this ecosystem where on-ramps and off-ramps to the system are controlled by centralized exchange players. These are very necessary components of this ecosystem to get new capital in and get capital out. However, they do create counterparty risks, and they are significant counterparty risks.
How does Armanino bridge that trust gap? And how do they solve for these custodial issues and promise that your assets are safe?
Today, what we're trying to do is move accounting forward, to move our own industry forward, actually. We're trying to leverage blockchain-enabled assurance tech to provide audit and trust and transparency to investors, to enterprises, and also to institutions. And it's really in three key ways. First, proof of reserves for digital assets, real-time audit for asset-backed tokens, as well as a product tailored for the needs of investment funds and asset managers. So each of these products is actually available today to investors and to the public. We've launched all these software tools under what we call Trust Explorer. Trust Explorer is, in its inception, world-first technology. It offers today the world's first real-time audit solution, but it's also blockchain-enabled or digital asset-enabled solution. This process that we've created, we call it a proof of reserves assessment. Simply put, in a proof of reserves assessment, we check both sides of the equation, the user liabilities that sit on the exchange platform and the custodial assets that the exchange holds on behalf of the customer.
This type of transparency doesn't exist in the traditional financial system, and it could be a complete game changer for counting as we know it.
I think we're going to see accepted standards for proof of reserves. It will enable money transmitters in the US and exchanges across the globe to provide proof of reserves to their users in a way that's really meaningful and can increase adoption. I think the institutional adoption there is definitely held up by not being able to trust these counterparties in the way that they need to. I think we can solve that problem.
We need registered investment advisors, financial advisors who manage your mom and pop's retirement money to understand the utility of digital assets. They're going to be subject to, these strict standards of legacy finance, if not stricter, due to the technological savvy that's kind of required to protect these assets. But that's the gap. And at Armanino, we know we can assess and validate these programmable assets in real time, and we can sort out and build compliance in an automated fashion that's not only going to save the end user on costly assurance expenses, but also safely onboard new constituents into digital assets.
Due diligence is always the biggest hurdle for institutional investors before getting into a new asset class. Armanino created a real-time audit tool that validates the custody of your assets, saves time and capital. This is a huge step towards mass adoption and a revolutionary step for the accounting industry.
I see a role for both of these type of solutions in the future, both using the traditional audit function and also using these decentralized autonomous software solutions. And this is actually happening today, where a firm like ours has actually partnered with Trust Token, who is a stablecoin issuer, to provide this service to their token holders. So what we can do is we can pull the token balance every 30 seconds and the dollar balance every 30 seconds and show both of those balance to users to give them confidence that they're fully back at any point in time.
We launched the world's first real-time audit. So today users can go and download for themselves. Anyone in the public can go download a real-time audit report for 5 stablecoins now, other stablecoins and asset-backed tokens actually coming soon, and effectively have an assurance window that's only 30 seconds aged. So we've gone from a year of traditional financial statement audit down to 30 days of collateral audits, down to effectively 30 seconds over these stablecoins and asset-backed tokens. So that's an order of magnitude better when it comes to trust and transparency. We think it's a small step for blockchains because, again, they're already open and transparent. But it's a big leap for the traditional financial world and also for our profession as accountants and auditors.
A more transparent and trustworthy market seems promising. And with that, we should see an influx of capital to build a better system for all users.
It's really about the future of transparency and giving counterparties and all the asset-backed synthetics or tokens across the digital landscape the ability to bridge on and off chain. And so this financial revolution shouldn't adopt the sins of like vague fractional reserves and baking and paper gold from the old guard. It should be open. It should be transparent for the benefit of everyone participating. And this is how we kind of fulfill the dream and build the future of finance.
Finance. Now it's new and improved.